Good afternoon, everyone. Hope you all are having a wonderful weekend so far. In today's video, I'm going to take a member's request to try and create a scan to essentially scan for earnings that are coming up that are near all-time highs that also have high short interest percentage. So we're going to try and use a bunch of different tools, write some code that allows us to scan for this, and then go through at least some of the top results, and then you can go through the rest on your own time. So let's start by first coming into the scan tab here. The only two scan criteria that I currently have is a volume condition, in which we're looking for at least a minimum of 500,000 in volume, and then the minimum bid needs to be $20. You can tweak this if you'd like to find lower price stocks as well, but I found these two give a fairly good starting point in terms of just finding stocks that are liquid and still just quote unquote fun to trade, or at least the ones that you'd want to be caught trading. Now let's go ahead and add in a filter here. Let's start by first creating a custom study filter. And in this one, what we'd like to do is create some code that allows us to scan for something that's near all-time highs. Now, if you've seen one of the previous videos, we had coded this up before, but we're going to do something similar in this video. In the scan criteria, let's click ThinkScript Editor, and here we can delete the ADX crossover and start by writing our own code. Now, the threshold, or in terms of how close to our all-time highs, or at least the past 365 days highs that we'd like to be, we need to first create a variable for that. So we'll call that def percentage threshold. And we can this time give it something like a 15%. So if we're within 15% of all-time highs, or well, the all-time highs for this year, then go ahead and show this on the scan result. Now, the next thing we need to define is the actual all-time high here. So there we could say something like all-time high is equal to highest. And then this is take the high of the past 365 bars. Keep in mind that this goes even beyond one full trading year. And so it gives you more values than I think potentially necessary, but allows you to really just be certain that you're getting the highest over the past 365 days. Now, using those two values, let's go ahead and plot our condition. So we'll say signal is equal to the all-time high minus our current close. And then if we take this gives us essentially a difference value, which if we divide that by the actual close value, that gives us a percentage, which we can compare against our percentage threshold. So we'll say percentage threshold. And now this will, if it plots true, then this condition plots true, which is what presents it on the scan. If this value plots false, as in we are greater than 15% away from our previous all-time high, then nothing shows up on the scan based off of this. So if we click OK here, and then we need to add in one more filter before we actually run this. So let's go ahead and click Add Study. This time we'll click Study one more time. Now inside of Study, there's Corporate Actions, and inside of Corporate Actions, there's an Earnings filter. And this is what's going to help us try and find upcoming earnings. So we'll say Earnings has an earnings announcement anytime. So this is before or after the market. Don't really care about that. And instead of the next 10 bars, let's change this to be something like maybe even 15 bars. Actually, let's stick with 10. 10 is probably a good list to start off with. And so this allows us to go the next 2 weeks. Now we'll click Scan here. And once we have our results, what we're going to do is paste all of these results. So we have 200 results. So we'll paste all of these results into an Excel spreadsheet. So let me go ahead and open that. So if I drag in an Excel sheet here, we can go ahead and paste in all of these values. And then we'll write a simple formula that allows us to get a comma separated list of all of these tickers. So we'll say A1, so that's the very first column with the and sign, and then just add in a comma after that. Go ahead and apply this to all 200 stocks. And now we have all 200 stocks that we can go ahead and analyze the short interest of. So now let's come in, let's copy the first, let's just say 100 here. So let's go up to something like STM, copy this, and let's come into our short interest scanner. So let me bring that onto the screen here. And then I'll click short interest. And inside of our short interest scanner here, we can simply paste in that list and then get all of the short interest values, which we can then start to examine a little bit further. So once I paste in those values, I can then filter by short interest. And now the ones that I think are most interesting here are the ones that have double digits. So let's start with iRobot as an example. So if we come into our ThinkOrSwim charts here, now, iRobot does look interesting, right? So it is meeting our criteria. It has earnings, I think, this upcoming Tuesday. It's after market hours. We don't have a squeeze forming, so that wouldn't necessarily suggest or support the idea that you continue making a move up higher. However, based off of just price action along with high short interest, that 1272 seems to be a very interesting and likely target at 95.17. If you come into the options chain here to try and see if there's something interesting in the 95 zone here, the iRobot options chain isn't all that liquid, so nothing too exciting. 95, You have about 74 open interest, a little bit higher than everything else, but nothing that I think really screams to you. So we'll keep iRobot in the back of our pockets. The other interesting thing with iRobot, if you layer in the Smarter Earnings tool, is the amount of gap and go. So here I have, I think, a daily 2-year chart. So it goes through 8 earning cycles. And based off of the 8 earning cycles, we've had only one gap fill. That one gap fill was on a beat. And then 7 times we've had gap and goes, which is really no fill, but instead you keep going in the direction in which you gapped. And 2 out of 2 times have been on beat. So again, if we do see a beat in iRobot, then I think that starts to become interesting and expecting some sort of bullish price action, taking us somewhere towards that 95 zone. And if we see a bearish price action here, so a bearish miss, meaning we gap down lower, that doesn't necessarily have any data supported with earnings misses, right? So no real insight here. If you gap down lower, then I think that takes away this idea of the 95 zone. However, if we do have a beat and you either gap down, then you're expecting that gap to get filled, or if we gap up, then you would be expecting that 95 zone to try and get filled, essentially using short interest as a measure of trying to predict whether stops are going to get run as a result of that if the price action just keeps going up and up and up. Now let's keep going through a few other stocks here. So coming back, let's actually minimize this and let's go ahead and take a look at BGS next. So BGS, something similar, right, as well. Here in BGS, we actually do have a squeeze. And if we come in, we take our swing high to our swing low here, then you'll notice BGI is right around that 50% mark. The 1272 seems a little bit far. And so really now the question starts to become, well, how do we start to narrow down 200 entries here to try and find a list that's a little bit more manageable? So one way we could do that is instead of making this something like 15%, we could change this to something like 10%, right? Click OK, click scan, see if that 200 goes down a little bit. So now we're down from 200 to 160. We can take the same list, come back into our Excel sheet here, and see if we find something interesting. So again, repeat the same formula and copy paste this, come back into the short interest scanner, paste that list in, and let's filter one more time. So we already have iRobot. Now another one, and this has been on my radar for quite some time, is Carvana. So let's look at Carvana, and then you can really go through these stocks and based off of your own analysis as you'd like. But Carvana, let's take a look here. So Carvana has earnings coming up on 10/29, so we're within that 14-day period. Currently at 221.34. Let's take our most recent swing high, even before this gap, to try and get a measure of where that 1272 is. 1272 takes us to 255.72. So if we do leave this gap really just unfilled and price action continues chugging up higher, essentially what I would expect here is as we keep making a move up higher, stops keep getting stopped out here. If we take out 242.15, then the next target here looks like 255.72. And let's see if there's some sort of interesting pin here into 255.72. So earnings, I believe, are on 10/29. Right, so 10/29 according to ThinkOrSwim after market hours. We come into our trade tab here, so let's look at the option series that does account for 10/29. So that's the 30th of October. We'll narrow this down to 14 strikes. And if you remember, we were looking at 255. Come back in. Let's actually expand this so we can see the 255s here. So let's make this something like, let's say, 30 strikes. And now we see it's 255. It doesn't really have as much of a difference in terms of open interest as we'd like to see, right? Nothing that's glaring. Now, if we try and build out a trade here, it's like something like a vertical. If you did see a short interest run into earnings, then 255, 260 is right around 95 cents for a $5 wide. That's interesting. It's not as liquid as I think I would have hoped. Okay, let's keep this in the back of our pockets. Let's look at a couple more actually before we conclude this video. Penn Gaming, Chegg. So let's look at Penn Gaming. Let's come back in first to the options chain here. So Penn looks a little bit more interesting here. So let's come in. We'll draw our swing high to our swing low. 1272 takes us to 80.53 in Penn. Our earnings, 10/29. So again, the 30th October series. We also do have a squeeze forming here, which looks like it's starting to lose momentum and maybe even turning to positive. So now coming back into Penn, 30th October. Looking for that 80.53 strike area here. So if we come in, look at that 80 strike. Let's go ahead and use a rectangle tool here just so it keeps things nice and clean. This one looks a little bit more interesting, right? We do have much higher open interest compared to anywhere else on the option chain outside of this guy right here. Also 2,820. So really these two strikes stand out. Let's see what that looks like. So that's a 75-80 spread if we were to try and map that. So 75.80 for $1.38. That's interesting. Another way to try and play this might be using something like a butterfly here. So let's go ahead and create something that's say $5 wide. So 75, 80, and then let's come into 85. That reduces the risk down much, much lower, right? So 47 cents if you can get it. Probably something closer to 50 to 60 cents, I think, would be realistic. And then if we come in, we analyze this trade, what that takes us to is anywhere between 70, really 75.46 all the way up to 84.49. And then this is as we get closer and closer. So now let's imagine on the actual earnings date if you add or close somewhere around there. So let's come back into the Analyze tab here. Let's change this date to the 29th. Then our max profit ends up becoming 112.35. Again, keep in mind that 112.35, while it's not at the peak here in terms of the expected move on expiration, for a $47 investment, that's a really nice return. Now, if we also start to factor in, say, an IV increase as we make a run up into earnings here, let's try and model that out just a little bit. So let's say the volume here, current options chain is at right around 102%. So let's say that you have an increase of right around, say, 10% in volatility. That's just an arbitrary number, but to give you an idea of what that looks like in terms of the P&L. So if the volatility increases by 10% here, you should notice that your P&L decreases. And so that's not entirely what you'd like to see in terms of this position, knowing that we would expect volatility to increase, the IV, headed into earnings, especially for those of you that do subscribe to that philosophy. However, even if earning or volatility does increase by 10 percentage points here, that still gives you a fairly nice return if you do pin at that 80 mark, right? So 98.95 for initial $47 investment. Now, another way that we could try and skew this is if we skew the butterfly. So instead of making it a $5 wide even balanced butterfly here, let's say we change this 85 to be something like 83. That's now a little bit more expensive of a debit, but if I come in and we analyze this, what you should notice is you have really no upside risk here. So at most, if we overshoot that 80 zone, if you're especially bullish on Penn, then your max profit here is 118. You'll notice that our pink line or our magenta line shows us a little bit greater profit. This is again accounting for a 10% increase in volatility here, along with the expiration on 1029 in itself. So this is earnings day, after earnings day, excuse me, and that's 82 cents. Compare that to the balanced butterfly here, which does have a max loss associated with it if you do overshoot. So for those of you that are, I think, overly optimistic on Penn, this unbalanced butterfly starts to become fairly interesting. Now, one other thing which we can use to conclude in terms of our analysis on Penn is take a look at historical earnings here. So again, we have 8 earnings periods. Now we have a greater than expected move 0% of the time, so that's information right there. Total gap fills, 3 total gap fills. One of those was a gap up, which then filled, and that was not on a miss. 2 of those times was a gap down, filled, again, not on a beat. So no real insight there. We just know that 3 times we see gap fills, and then 0 times we have the gap and goes. So this doesn't necessarily give us interesting information where I think this starts to make for a fairly interesting set it and forget it sort of trade where you'd be expecting Penn, if we continue to see the same sort of bullish optimism in this betting casino sort of region that we've been seeing. We've seen this with Penn. We've seen this with DraftKings. If we continue to see that same momentum picking up into earnings, then this starts to give you a fairly low risk way of trying to play a move into this 80.53 zone. Finally, the last way that you might actually consider, which is I think the easiest, cleanest way outside of a long call, is just a straight vertical spread here. So something like a buy vertical, the 80.81, that's 24 cents. That's fairly cheap, right? So that's 24 cents, risking 24 to try and make 76 cents. A pretty clean trade, and one that you might find to be just the easiest in terms of managing to just try and play a move into earnings. We come back in, let's analyze this. So if we close out this broken wing butterfly here, now the only one that's plotted is this 80.81. We still have that increase in 10% in volatility. You'll notice that as we essentially get closer and closer, your max profit gets to right around 60 or so dollars, especially if you do start to make a move above what we're expecting by expiration time. It's only when you actually get to that 30th October that you would face the max profit. And so to me, these are 3 different ways in which you might be playing a move. Of course, this is just Penn. You can come in, you can repeat the same exercise for not only the stocks, anything in double digits short interest here I think is interesting. But outside of this, we still have that entire other list of stocks that we haven't even explored. This is just the first 100. We have, I think, the next next 100 from that list of 200, and even more from that, or 60 more, excuse me, from the list in which we were looking at just a 10% difference between our all-time highs. All right, hope this gives you an idea of how to try and find not only upcoming earnings, but stocks that are currently near their all-time highs headed into earnings, and then layer on short interest on top to try and build out a trade that works for you. All right, take care, everyone. Good luck trading, and we'll see you in the next.